I have a speaker here today, but I'm gonna talk first. We have a small group today, everybody else must be over at the, employee cookout. If you didn't, and I'll make copies, if you didn't get the email that was sent out about the IRS scam, I'll make a copy, I know some of you don't. It was sent tribal ops, so, there is an IRS scam going on. And you guys all know that it doesn't matter who calls you, don't be, giving any of your information out. The person that got the letter, they actually started out with that they were gonna be sending a sheriff to their house and they were gonna be arrested, and, I just am consolidating what she wrote, but, anyway, there is a letter. If you get the email out here, then just print this, I'll make copies for you guys that don't. It's a scam, so, don't give anybody any of your information when they call you. IRS isn't gonna ask for your credit card or debit or any of those things. They already know all that information. Yes, ma'am?
I don't even think they're gonna call you. They're gonna send you
Right.
correspondence. And
Right.
they're gonna pick up the phone and say, who's
Yeah. Cheryl, you owe us money,
You
and
owe
we're
us,
gonna, something that was in the email, I didn't print the email, but said that they were gonna send a sheriff out to the house, blah, 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 but anyway, don't respond to them. Katie is with an insurance company locally, and she is going to talk about auto insurance today and give you ideas that maybe you have too much coverage, ways to cut back, or if you don't have enough. And we're going to open it up for questions. This went over really good in Standish when I was up there last week, and we actually have to do a second set up there. So with that, this is Katie, and give her questions.
Hello, it is nice to be here, thanks for lunch. I am basically, well, my name's Katie, like Cheryl said, and I sell insurance for Farm Bureau. And today what I'm going to do is basically go through the coverages. Everybody has the same standard coverages, whether you're with Farm Bureau or State Farm or Allstate or homeowners, auto owners, whatever insurance company you are through, you're going to have these same coverages. It may look different because this is called a deck page, which the deck page gives you all the information on what you have for coverages. So all of those deck pages look different depending on how companies want to present that to you, but all the information is the same, the content is the same. So I thought I would use the whiteboard and we would refer back and forth to a sample policy and really just ask questions as we go along the way. It's kind of how I do if you were to come to my office as a new client, we would go through these and make sure that they are what you need so I know how I'm going to cover you. But basically, if you get down to the very basic part of insurance, insurance is not a maintaining policy. It doesn't maintain your auto. You, as the owner, need to maintain your auto. You need to do your oil changes. You need to make sure that the motor's running and you put windshield wiper fluid in it and the tires are pumped. That's on you. Your insurance company doesn't provide that. What insurance is meant to do, basically, is risk management. We want to be able to get you back to whole if you have an accident. So what does that mean? If I hit a deer, what would getting back to whole mean? It would mean fixing that vehicle. So that's where your insurance comes into play. That's the physical coverage that you receive for auto. If you hit somebody and you hurt them, you can be sued for. Does anybody know what you can be sued for in the state of Michigan to be held liable in an auto accident? What could somebody sue you for if you hit them in an auto accident?
their own personal injury.
Okay, so they either lose a body part or they lose a body function, or they're not able to work because of an injury. So that's two things. What else? Yeah, if you kill them, they're gonna sue you. Yep, if if you're at fault there. So if you kill somebody, they're definitely gonna sue you for that one. There's another one. So work loss, bodily injury, as far as disfigurement and actually it's not cool, but I think it's kind of cool because I'm an insurance geek. There's different amounts that your body is covered for. So like they know if you cut somebody's ear off, there's an amount that's attached to a person's ear that they would be given to. Oh, there's no. That's okay. And then the other one is if you cause mental stress on somebody. So because of that auto accident, that's a newer one, but it is something that's come in the last couple of months, that if you cause mental stress because of an accident, maybe if you did end up hurting somebody's child and they were driving, there's a lot of mental stress there. They're not able to work, kind of, you can see where that goes. So that's where the top part of this insurance deck page comes from. And do you have sorry.
Are they on the backside?
No.
They're over here now.
Oh, super, there's a lot of them.
Pick a color.
Okay, so all your auto fault, oops,
You
there's,
can give it back.
oh, wait a minute, is there an eraser on these? Yes. So liability, and that's what we're gonna talk about first. That's the top part of your policy. So after, in liability, you'll see it says bodily injury liability. That's what you have to have in the state of Michigan. You have to have that coverage when you drive. If you don't have it, it's illegal and you can get a ticket for it. But basically, that's saying if you hit somebody and they sue you, you have a certain amount of coverage to protect you. Okay? And in the state of Michigan, you have unlimited medical benefits that we're going to get to. So let's break down bodily injury. What does this person have for coverage? Does anybody know? If you're looking, oh, I just Googled yours. Sorry.
No, that's yours. I'm
Is
not gonna answer questions.
Yes, what did you just say? You're right.
500 per person and 500 per occurrence.
Yes, so they have 500,000 per person, 500,000 per occurrence. So what does that mean? That means if I'm driving down the road with my family, or I'm driving down the road and I cross the center line and I hit a minivan of a family of 4, and let's say this first person, I hurt them pretty badly and they're not able to work for a whole year, so I owe $250,000. That's what my legal coverage is, and that's the payout for that one person, okay? The next person I hurt about $100,000. They broke an arm, they weren't able to work for a month or so, but they're okay. The third person, I didn't do it, nothing happened there. And then the fourth person, I hurt pretty badly, like even pretty badly, $300,000. So if I have coverages of $500,000 per person, and $500,000 per occurrence means total accident. So at any given accident, the insurance company is only going to cover $500,000. If we break this down, orange here. So if we look at person number 1, $250,000. Can I pay them all $250,000? Yes, right, because I haven't hit my limit of $500,000. So I'm going to pay this $250,000. Or the insurance is going to, sorry. $100,000, can I cover that? I haven't reached my $500,000 yet, and it's under the $500,000. So I'm up to $350,000. $300,000, can I do that?
Over budget.
I'm over, yeah, that's a great way to put it. I'm over my budget. I'm over my liability budget. Okay, so I could pay out, how much could I pay, $150,000? The insurance company could, and I'm left with $150,000. Who pays that $150,000? You do. It comes out of your pocket. Okay? So how do we determine if you need $500,000? So what we want to do is...
What'd you say?
How bad a driver you are. My sister needs more than
Yeah.
Uh-oh.
You can take driver's lessons.
So basically what we want to do is look at how much assets we have. What could people sue us for? What's the most somebody could sue us for? if you've accumulated retirement, if you've accumulated some property, if you have a 401k, and this is not just you, but it's whoever's on that policy. If it's you and a spouse, then you need to look at how much do you have total. Do you have 1.5 million somewhere if you add up your retirement? Maybe you have some stocks and bonds somewhere. You've invested wisely over the years. Is $500,000 going to be enough? I don't know, but it's at least better. The minimum in the state of Michigan, does anybody know what the minimum is to be legal on the road? It's $20,000 per person, $40,000 per accident. What will $20,000 cover if you kill somebody? Nothing. Probably not even your legal fees. Not even gonna touch it. So who's gonna have to pay anything above $20,000? You are. And how will you do that?
Bill.
You're gonna pay for the rest of your life. They're gonna subrogate your wages. So that means they're gonna go in and they're gonna take any wages that you get. You're really not gonna ever be able to own anything until you've paid off your debt. Until you know, because that's an asset that you have that they can take now in their value to pay off what you owe them.
Can you go bankrupt on it?
Can you go bankrupt on it? No, you would have to figure that out with the lawyers. I mean, they're still gonna go after you and they're gonna put you in that financial position, but you're gonna have to pay however much that person owes. Yes, question?
How do they determine who gets what money on the?
A judge. It would go to court, you'd go through court, and they would determine how, the judge says, you were liable for this amount. And they would show, if you hit me, I could show that I didn't get to work for half a year, so I've lost my wages, we weren't able to pay mortgage payments, all of those things, and then we could add it up and say, okay, the judge says, because of this accident that you caused, you owe them $350,000.
No, I wasn't thinking
Oh,
about the
sorry.
amount. What I was thinking about was, who was hurt the worst? Do they go by that?
Yes, it would go to the judge.
That's what I
Yes,
wanted.
yep, it would go to the judge, and then the judge would talk to that, it would be all litigation on that side. So basically, you're just making sure that the insurance company can pay for those bills as long as that's gonna be drawn out. And worst case scenario, you kill somebody, that's not gonna take 6 months. That's gonna be a long drawn out process. So, if you hurt somebody, again though, it's just not gonna, so let me back up, because with insurance, whenever you have a claim, whether it's a deer hits your car, whether you have shingles come off your roof, anytime you have a claim, it's a process. It's not gonna take 3 days. It's gonna take some time to go through those channels, to work with the proper people, and I'll talk more about that in the home part. But just know and kind of be prepared that it's gonna take a little bit, because there's proper channels to go through.
And are they just gonna pay those people what it says there, or would they negotiate and maybe if you have 500,000 divided up between those three?
It would go to the lawyers, and then
That's up to them.
yeah, it's up to them, yep. And they would work with our legal firm, so our insurance company, or, your insurance company would go back and forth with those lawyers as well. It's not, when you always hear about the insurance companies in court, they're really in court. Trying to either, maybe they're gonna get it lowered, or like you said, kind of negotiate back and forth, okay? But here is where they will get you, here is where like online companies will say you can get your insurance really, really cheap. Well, yeah, you can get your insurance really, really cheap, but it doesn't mean that you're covered. But a lot of times if you look, when they quote you online, they're gonna quote you $20, $40, because that's way cheap. And now insurance really has taken this whole, the cheaper is the better route, when reality is you're not covered for $20,000, right? If you hurt somebody, or even if they're out of work for a couple months, $20,000 isn't gonna cover much. So, a lot of times we will, if you're just starting out, you're young, we'll start off with 100,000, you'll see 100, 300, people will say that. Or 300 is even better than 100, 300. The difference in these, always ask for a quote to see the difference. It is not much to get an extra couple $100,000, okay, in the grand scheme of things, $2-3 a month. So this would mean you'd have 100,000 per person, 300 total, okay, same thing. On the flip side of it, if you scroll down scroll down, like we're on a computer. Scroll down your iPad. You'll see the word uninsured, underinsured. Do you see that? Okay, and that is for how much on this policy? $500,000, yep, so 500, 500. That's if it flips. So let's say now this is my family. Okay, this is me and my husband and I and our 2 boys, and we're driving down the road. And let's say Cheryl doesn't have car insurance. Okay, I know you have car insurance because I rode with you, but I'm just using you.
Oh, yeah, I have car insurance. You were just in the car.
I'm gonna have to check that next time. But let's say she doesn't have car insurance and she hits me and she hurts my children just like this, okay? She doesn't have car insurance. Where is she gonna get that money? She has no insurance company to back her up. What happens is I pay for this on my policy. So Farm Bureau is gonna give me, or your insurance company is gonna give you the money that you deserve, okay? And then the company is gonna go back after the person that hurt you and we'll deal with that. But I will get my money up front so that my family is protected. So you wanna make sure, again, you're protecting the same assets. So you wanna make sure that bodily injury liability and uninsured, underinsured liability is the same. So if you hurt somebody and then if they hurt you and they don't have insurance, and a lot of people don't have insurance because it's so expensive in Michigan, okay? Any questions on
Why
that?
is it so expensive here?
We're gonna get
Because
there.
I'm from California.
It is?
Yeah.
Astronomical, is it? So we're gonna talk about that. You're gonna lead me into it. Any questions on this? Because we're gonna go right into your point right next. Okay, so, excellent. What's your name?
Jeremy.
Jeremy. So Jeremy, when you were in California, if you guys look, there is what's called personal injury protection. Do you guys see that? Across this, it's right underneath property damage. It's $209 for one vehicle. Okay? It's $269 for the other, and that's a 6-month term. So compared to giving you $500,000 of liability, which is only $50 for the HHR and $62 for the truck, it's a lot more, right? Why is that? Because in the state of Michigan, this is called PIP. In the state of Michigan, you have unlimited medical benefits if you get into an auto accident. So if I hit Jeremy and he has a closed head injury for 10 years because of that auto accident, his insurance company is going to pay for his medical insurance for those 10 years. Is there going to be subrogation and some liability issues behind that? Yeah, I mean, there's going to be stuff. But essentially, you have unlimited medical benefits until you no longer need them, until you've gotten better or you passed away, okay? In other states, there's caps where maybe your auto insurance will only pay up to $2 million, and then anything above that you take on. Then there's other options where, like your deductible, you know how you can change your deductibles? You can change them 100, 500. They also provide options on the PIP where you pay for what you want. If you want unlimited, you pay the $209, the full amount. If you want only maybe $1 million, then you pay $100. If you want 50, if you only want 50,000, I'm just showing you numbers, but they give you a range so you can pick how much you pay. In Michigan, you don't have a choice because of legislation, okay? And there's a lot of legislation out there because insurance companies don't like it because it's really expensive and you guys don't like it as our clients. But who pays the medical expenses if the auto doesn't cover it?
Your insurance.
Your health insurance, okay? So if you have health insurance carriers in the last couple of years, because of the cost of health insurance, you need to read your fine print and know, does your health insurance cover auto accidents? Some health insurances do not cover auto accidents, okay? A majority still do, but there are some. And with all the changes in healthcare, just kind of keep on top of that. So if you do have health insurance that does cover auto, I'm gonna write it down because I'm on visual, sorry. Oh, that works really, okay, there we go. Well, we'll make it work. There's what's called primary PIP, or you'll also see excess, okay? Primary PIP or excess PIP. So primary means if you see that, that's the most expensive, because it means you don't have health insurance, or you don't have health insurance that covers auto accidents. So your auto carrier is your primary health insurance provider if you get into an auto accident. Does that make sense? If you do have health insurance, you can do what's called either coordinated or access. That means the first person to be billed is your health insurance, and anything in excess of that will be the auto insurance. Okay, essentially auto doesn't want to be that first person. They would rather be access, so it's cheaper, because they don't want to pay that first amount. If they can get the health insurance to pay it, they'll make it cheaper for you. If you don't have health insurance, then you're going to see, and actually check, because a lot of insurance companies lately have been making it so that everybody is primary, because they don't want to be caught. Unless you give them a reason that you shouldn't have primary, you will be primary on your auto. So you need to check, and if it does say primary and you do have health insurance that does cover auto, you can call your auto insurance company and tell them the number, like your group code and where you get it from, and it will make your insurance cheaper, because it'll change it to excess.
Does that influence, like, I keep getting letters from Blue Cross Blue Shields every time we're going to doctors saying, was this visit due to an accident?
Yes,
So
yes.
I'm like, why do I keep getting these letters? Oh, they should know by now, we're just going to the doctor.
Right, they're probably going to do that every single time, because if they can bill the auto, they'll bill the auto, they won't bill themselves. Does that make sense? So they're gonna ask, if it's an accident and they don't cover a specific accident that you had, then they'll send it right onto the auto. They'll decline
Is
it
that what they're trying to
and
do?
send it back to you, and then you'll have to put it into auto, auto, and see if auto will take it.
Gee, you have health insurance and then they don't want to pay.
Right. I know, it's funny how insurance is like that.
Yeah.
I know. I hear that all the time. But you're right, I mean, they're really, insurance is very specific, and a lot of people, obviously, when you get your packet, you're not gonna sit down and read it, detail by detail. But you really need to have a good relationship with your insurance agent to say, okay, what is and isn't covered, and I just wanna be clear up front. A lot of time when you're quoting autos, some companies include glass coverage, some it's an add-on, and some it's part of your comp, so you have to pay a deductible. So it's really having those conversations so that you don't call and say, oh, I didn't know that. Does that make sense? Yeah.
Is all the pertinent information that's, in layman's terms, on the deck sheet? Pretty much?
All your coverages are. What is not covered is in all of the book that you get
Okay.
at the beginning.
That you don't read?
Yeah, that you don't read. Yeah, but ask those questions. Is this covered? How do you think that's covered? What a lot of insurance agents are going to say is, well, it depends on the circumstance, and they're really true, because there are so many factors. I mean, what's your name, sweetie?
Ashley.
Ashley. Ashley could tell me about a friend and how the insurance company dealt with this situation, and it's not right, but we don't have all the factors, nor do I know maybe that insurance company does it differently than my insurance company. So it's really hard to say, point blank, this is what's gonna happen, because so many things could happen in those factors. But a deer hits you, it's pretty clear,
Right.
yeah. Good question.
So now when you put your teenager on, you're taking the risk of that? Right there?
Yeah, well, when you put your teenager on, it's automatically gonna make your insurance go up. I'm sure everybody knows that. You can plan for $60 to $80 a month to add your teenager onto it. It's not gonna be cheap.
Maybe she waits till they're 18.
Couple things that you can do though.
But explain here what we talked about in Standish, as far as not putting them on, how people hide it.
Yes, okay.
Explain that, because that was good.
Sure, because it's expensive, and so people don't want the insurance companies to find out about them. You'll hear them like, well, we're not gonna say anything because we don't want them to find out about it. Technically, if they're not listed on your policy and they get into an accident, even though I'm sure 95%, because they're part of your household, you will have coverage. What happens is that when that child goes to get their own insurance, they have to actually be placed in a higher premium market because they're not named on your policy. And so they, in technical terms, they don't look like they've had insurance. And in the state of Michigan, a lot of insurance companies now make it mandatory, you have to show that you have had insurance for 6 months. If you can't show that with a certificate, then we put you in a higher premium market. That's much more expensive. You have to be on there for 6 months, and then and they're already gonna be expensive because they're 18. And so then their premium is they're gonna be, it's insane. And you probably know that if you've had kids to add on it, but it's actually cheaper, it's just cheaper to put them on your policy for them. Plus, they also then, if, let's say you have a multi-policy discount, so you have a home and an auto through one company, if they're named on your policy, they're getting your discount, and they're getting your credit score, insurance credit score, which is different than your credit score, but we'll talk about that in a minute. So it really does, even though it seems expensive, it's gonna be so much more expensive if they live in your house, to add them there and then go that route.
What about giving them their own policy? That's what our insurance agent had us do.
You could totally do that too, that's an option. We always quote it out, we always show them this is what it's going to be by themselves and this is what it's gonna be to add them. When they get to that point where they're kind of like in college and not, it goes by the address that's on, because there's gonna be a point when the insurance company is like, okay, that person's old enough, they need their own policy. You're starting them out great. If they go by themselves, then they've already started to build their insurance credit, so that's a great idea. When they get to be like that 21 to 25, insurance companies, depending on how vehicles are titled, they're gonna start questioning where this person is, where their insurance is, and should they have their own policy or not. So there's some discussions with your agent that you need to have on there. So either way is good, yeah. Yes, Betsy?
Now what about, like in my situation, I have an 18-year-old, but he doesn't have a license.
So then he doesn't need insurance.
So I don't need to worry
You don't
about
need to do that.
telling the insurance agent,
No, because they'll find them. I mean, insurance companies, either every time you renew or every year, they run title plates, they run titles, and they run licenses. So they can come in and they know based on, I want to say like Department of Transportation, they know what addresses and who's all connected. What will happen is a report will come up, and I can run a report and see who has been at that address, and then I have to verify where they have insurance from. So if it shows that you have an 18-year-old, he's not going to show up because he doesn't have a license. When he does get a license, because there are exceptions to that 6-month rule. If he's 18 and he hasn't had a license, he can get insurance in the mainstream market because he hasn't had, or if he's been, maybe went to the service and then came back. There's exceptions there. It's just if they've had a license, they need to have insurance somewhere. Yeah. Now, another thing that we talked about is a lot of times people won't have vehicles, but they drive. They don't, if they're not named, like we'll have people where their vehicle gets totaled and they don't have a vehicle, or it's broken down and they're not gonna fix it, but they still don't have a vehicle to drive. They still have a license and they're probably still gonna drive. They need insurance, they need to be named somewhere. Because if they're not named, they don't have coverage when they're driving that vehicle. So if they're driving your vehicle, if it's a son or a daughter or a cousin, a friend, if they're driving your vehicle and they don't have insurance, your vehicle has insurance, like the physical damage, but the liability, if they kill someone or hurt someone, they don't have insurance. They don't have that protection. It doesn't fall on your policy unless they are listed on your policy. Does that make sense?
no, that's
Yeah.
horrible.
So you'll get, but like you'll have, I just don't think people will think about it because they think if I don't have a car, I don't need insurance. You need insurance more for the liability than for the physical damage of your vehicle. So you can get just non-vehicle auto insurance. So you're not insuring a car, but we're insuring you for the liability portion. Kind of like a renter's, like a renter's, you don't insure the structure, but you insure the contents. I don't insure, with a non-auto or non-vehicle, I don't insure the vehicle, I just insure that person. So that if they kill somebody, they're protected. Yeah, question?
What if you have a vehicle, but you put it in storage and it's been in storage for a long time and nobody is using it?
That's okay. That's all right. So,
It
okay,
doesn't need insurance, does it?
nope, if nobody's using it, you just have to make sure that if you do plan to use it, to put it, put it on coverage. A lot of times, people like, this one, let's look at this, this is actually excellent. You see that there's three vehicles on here? There's a Jeep, and an HHR, and a truck. The vehicle number 3, which is a Jeep, do you see that there's no liability coverage there, it's all blank? That means that vehicle is in storage. So it has no liability, so if I'm driving it and I kill somebody, I don't have liability coverage. What it means though is I have physical damage for that car, so if it catches on fire, if the garage falls on it, a lot of times classic cars or like a Jeep, you're only gonna get it out in the summer. So why would I pay why would I pay for the liability if I'm not gonna drive it? And if you can see, it's only $21 for 6 months to put that Jeep in storage.
And you can take it off real easy.
And you can, yep, and we just tell people, call us on Friday, and never leave a voicemail at an insurance company and say, hey, add my vehicle, because that doesn't, what's called bind coverage, it doesn't make it official. You have to talk to somebody to bind that coverage. But people will call on Friday, they'll have a Corvette, they'll put it on, they'll call on Tuesday, take it off, or they'll put it, so, they have a winter vehicle, they'll take the winter vehicle and they'll only drive that. Or let's say they have another discount, if you have a student going to college and they don't have a vehicle, you can get a discount there on your policy. Or if you have a student and they're just parking it and they only come home on the weekends because they're at college, or they only come home maybe once a month or something, store that vehicle. I mean, if you're not driving that vehicle, but you want physical coverage for it, store it, because it's so much cheaper. Yep. Good questions. Let's see. And we haven't even got to the physical part, so that's a good, any questions on liability? These are awesome questions, guys. Yes?
The one you're talking about, if you have a license but you don't have a car,
Yes.
is that where you pay, that's the price if you're paying for a car?
No,
Is there
because
a whole different bracket of that?
it'd be different because we're not paying for any, it'd be kind of flipped how this vehicle's in storage. It'd be flipped so that we're not paying any physical coverage, but we're paying liability. So that would be the medical payments, or the PIP, and then that would be your liability that you would pay for. Then you can drive anybody's vehicle. And they don't have to worry about that, yeah.
So like, we have some employees that have tribal license that drive the leased car,
Yep,
but they don't have a car, they don't have insurance on their car.
they're probably, are they listed on the tribe's insurance?
I think we're just blanket, is that how that goes?
I would have to look at your policies, but a lot of times if you have, they would be insured, a lot of times if you're an employee of a company, you're listed on their policy to drive, so while you are using their vehicle and doing work for the purpose of that, you have that coverage under that policy.
That's what our tribal driver's license is.
Right.
That's what,
Yes.
that's proof that you're
Back on,
covered.
make sure you can be insured, you have to drive.
Yes. So they either always, like, you know how they used to have farm permits? I grew up on a farm. My dad was always like, make sure you have hay in the back of your truck, which is totally not right. But, just make sure that it looks like your farm purpose, right? So they need to make sure that they're not, taking it out on Saturday night, because technically they don't have coverage and it's probably violating a policy somewhere. But they don't, which I never did. I was really good at that stuff. I was paranoid. That's why I sell insurance, so. But good question, though. If you're in a business, it usually falls on that. Yes, sure.
So, maybe I missed it when I was
That's okay.
cleaning up my mess. If I'm in the tribal vehicle and I get in an accident, is it tribal's insurance or my insurance, or do they go to both?
It's going to go to tribal first. It depends. I mean, if you are using it in a purpose for the tribe, it's going to go to the tribe, because you are an employee at that moment doing something for that.
Right.
For that business,
Okay.
yeah. If you take that vehicle home, there's usually an endorsement that will say, on small businesses, what we'll do is we'll put it, and it's an endorsement that the company pays extra to allow company employees to use it as a personal vehicle, but it has to be an endorsement. It's not automatic on any policy.
We don't do that.
Yeah.
Yeah, we don't, it's just, okay.
Yeah, so just, yeah. In commercial as a whole, if you have a business, it's a whole nother realm, but, yeah, good questions.
Does
Anything
that
else?
work with valet people?
That's a great question. Does that work for valet people? They're doing work.
Delivery service companies, like who have pizza delivery. Who covers that? Is that their pizza place covering them?
Pizza place is covering them because they're doing the work, but, the physical, what I think is, I'm thinking, I don't know, because we don't insure delivery, because we don't want that risk. So I don't even insure one, so I don't even want to answer. My I mean, I can
I
assume,
didn't think about that.
but I don't even write them.
Sounded like
And that's why we don't write them. Those are really expensive premiums, because, yeah. Any other questions on the liability part? Because we haven't even gotten physical damage, but these are all really good questions. Are you feeling like you're learning something? Okay, good. Yay. Okay, so let's see if I must have wrote like really good. So we're gonna go down to the bottom part, and this is where we get into the physical damage of your vehicle. When do you have to have physical coverage on a vehicle? Nope, you don't have to. When do you have to have physical coverage?
That will cover damages to the car?
Yes.
If they're buying a new vehicle?
Yes, if you have a loan.
You have a
Okay, if it's
loan, you have
loaned
to
or
have
leased, it has to have coverage, okay? The bank is going, and I tell you what, those banks know as soon as you don't have it, and they're very quick to try to force place insurance. And if you've ever had force place, it is super expensive, it's ridiculous. And actually force place it only covers the physical damage, it doesn't cover liability. Because they don't care about your liability, they care about their investment on that vehicle, okay? The nice thing is, a lot of times, if let's say you switch insurances, or you got a new vehicle, your bank will know faster than the insurance company can sometimes get that information to the bank, because they're on top of it. So if you get that letter, don't ever freak out, just call your agent as soon as you can and tell them, hey, can you fax this form over? Don't wait on it, because they will force place it. But can you send them a proof of insurance? Yep, 5 minutes is taken care of. Okay, but you don't need to freak out about it, it's just they need to make sure that you're covered. And there was some changes that took place, so paperwork takes a long time in insurance. I wish it didn't, but it did. So when you have a lien or a lien on it, or a lease, you have to have physical coverage. The other option is PLPD, basically. So you have, on there you have comp, which is comprehensive, and then you have collision. What is comp? Does anybody know what comp covers? Comprehensive. Well, covers your car. I'm sorry. I didn't ask that question correctly. What has to happen to your car in order to have coverage in a comp claim? Like, what has to happen to your car? What do you need to do? Damage by what? What's it damaged by?
Covered accident?
Yes, good. So comp is hail, weather, deer, anything that's not another moving vehicle. We've had trash cans that are across the road, and in a wind, they come over and they dent your vehicle. We've had, if you have a parked vehicle and it gets hit, it's a comp, okay? Glass, this is where your glass coverage may be in comp. They're gonna roll it into comp, or they're gonna give it to you free. Okay, that's where you need to clarify right at the beginning. Does my comp cover glass? And if it does, do I have to pay a deductible? Because you'll get a lot of people that will call and say, well, I have to pay my deductible? Deductibles used to be free. Or not free, but you know what I mean, your glass used to be free. Well, it depends. If they provide glass coverage that is free, then it is covered. If it's rolled into your comp, you have to pay the $100 deductible, basically. And a lot of times, I see 100, you'll see 250, and you'll see 500. I don't really see a lot of thousands. You can go up to 1,000, but I don't see a lot of thousands, because what windshield costs $1,000, basically? You know what I mean? And the most typical type of comp claims we see around here is what we're heading into right now. Everybody's calling to add it on. Deer season. Everybody, hey, can you make sure I have comp? Do I have comp? What's my deductible? So they're already prepared just in case, to adjust that. So that's what comp is. A lot of times we'll have people that have no collision and just comp. just basically deer coverage, okay? So if they got into an accident with another moving vehicle, they wouldn't have any physical coverage, but they'd at least have deer. Because for the most part, people are thinking, I'm a good driver, I'm not going to hit anybody, but I can't control the deer, so I'm at least gonna protect myself from deer, right?
You think they can control the other driver?
I know, right? That's where it is. That's where it's like, because at fault, we're we're a no-fault
No
state.
fault.
Sorry, I got confused. We're a no-fault state. So if you hit me and I hit you, you go your way, I go my way, and we both take care of our physical damage. That's where the no-fault comes in. So there's no, you're gonna pay for my vehicle. Everybody's gonna pay for their own. And I'm gonna get tagged with points if I need to, but that's about it. So collision is based, any questions on comp? Pretty cut and dry. Yes? I have 5 minutes. I'm so sorry, I would talk faster. We're almost done. So collision is when you hit another vehicle, obviously, okay? And you can cover it, I'll see broad, 500, and regular, 250. Okay? You're probably always gonna get quoted broad. This is gonna be a little bit more expensive, but let me tell you why. It's more expensive because you only pay your deductible if you're at fault. If you're the one that makes that accident, you have to pay the 500. If you hit me, I don't have to pay my deductible. So you pay a little bit more, but you're probably not going to pay that $500, okay? Regular 250 is cheaper, but you're going to pay your deductible either way. Whether you're at fault or not, you have to pay that 250. Okay? If you, what is your name? I keep pointing at you. I'm so sorry.
Judy Pam.
Judy. Judy, if Judy hits me, I have to pay my deductible, but I can do what's called a mini tort or sue. I can sue Judy for my $250 back. But if Judy hits and runs, and I don't have any of her information, I'm out my $250. So you take a little bit of risk, but it's cheaper. You just have to pay that $250. Does that make sense? So if you're looking for little ways to kind of cut back, that might be a way. Okay. Any questions on collision? Collision's pretty cut and dry as well. Okay. Just a couple more things, and I will wrap up. But I just want savings. You all are receiving insurance scores. Okay, whether you know it or not. So every time you pay on time, every time you pay annually, you are gaining positive insurance score. You're going to see a number on your policy. Sometimes it's a number, sometimes it's a letter. Anytime you're late with a payment, anytime you have lapses or you actually cancel with your payment, you get we call it you get dinged, and it's going to hurt your insurance score. So really try to set yourself up so that you're making those payments, because that's how it makes it cheaper. Insurance companies want you to pay as much as you can up front for as long as you can. They don't want to have to worry about where their money's coming from. So if you can do an EFT, like an automatic withdrawal, it's usually a little cheaper, and it helps build up your insurance score. So that's why when you're young, you don't have a high insurance score because you haven't built anything up. It looks at your credit score, it pulls that in, but it's also going to look at what is your activity as an insurance holder. Basically. Does that make sense? So that's one way that you can help make sure that you are receiving those lower premiums, is when you're paying on time or paying even more than you can, you get a bigger discount. Also, there are discounts if you belong to any credit unions, if you belong to, and just kind of ask for all these discounts, how old you are. If you haven't had any accidents, you're going to get points for accidents, or you're going to get discounts. Yes, you're going to get discounts for not having any points or tickets. You're going to get discounts for not having any claims. Claims can and can't hurt you. It depends on what your claim is. Deer is not going to hurt you. If you have 4 at-fault accidents are going to hurt you. They're going to make your insurance score go up. Anytime you can combine your insurances so they're in one company, again, insurance companies want all your insurance in their hands, not anybody else's. So if you have a home and an auto, try to keep them together. That's going to be, for the most part, depending, sometimes it doesn't work, but in general. A lot of times if you're young and you rent, get the renter's insurance, because it actually makes your auto cheaper. Sometimes it's cheaper, or it's the same amount and you get renters and auto because of that multi-poly discount. So those are just some ways that you can get some discounts in there to help you out.
Where do we find our scores?
They're going to come out. They're usually on like the second page. Now, with every, I don't know what, but with Farm Bureau I can tell you, it's the very first page you receive. It's before your deck page. It already tells you what your insurance score is. So you might want to go back and look at when you last renewed. And then call your agent and say, they'll know, they'll be able to tell you where you fall. I can tell you right now if you've fallen, if you're where you're at. So they should be able to tell you that. Yeah, Betsy.
Is there a benefit to dealing with, because there's a bunch of Farm Bureau, there's a whole bunch of,
State Farm,
all different, is there a benefit of going with one agent office versus another?
Like individual office, it's better to stick with one company, which is different, because if you
But let's say I'm with Farm Bureau now, but a separate office, is there a benefit to then moving to you?
No.
Okay.
Usually, State Farm is about the same. Usually you should have the same, pretty much the same quote, whoever you go to that sells Progressive, or whoever you go to that sells State Farm or Farm Bureau. You'll probably see about the same. They're gonna quote you this. What you'll see is you might see a difference in their office standards. Like our office standard is to quote 300, you don't have to take it, but that's what I'm gonna quote you at. Where you might go to another company and they quote you at 100, 300. So there's gonna be a difference in coverages. Do you know what I mean? So you really, I always tell people, if you're gonna go, but come back and let's just make sure, like that, if you're gonna leave with the right coverages. I don't want you to go somewhere cheaper and not get what you should be getting, Or at least know what risk you're taking on if you don't stick with those. Sorry, I think I went over.
I'm
You
just
guys are
gonna
great.
do, I got two
Thank you.
drawings, I'm gonna do them, but whoever wants to keep talking to Katie is fine. I just know some of you have to get back. 605. Deb. I don't know where they're at. Deb. Porter.
Thank you, you're welcome.
And 602. 602. Okay, just waiting for you to. So yeah, if you guys still have questions. Katie will be here if you have questions, that's great. Next month, we're gonna do a DIY. So bring a craft or something that you might have an idea for, we talked about that last month. So next month, that's what we're gonna do, and we will have something here that we've come up with to make, so that's what it is. I hope you guys got a lot out of this today. Thought it was a lot of good information. And Katie, you will come back to do homeowners. Katie will come back to do homeowners, so enjoy your afternoon. Thanks for coming.
Thank you.